Happy Friday, everyone. Futures Brizio here. It is 5:30 p.m. on Friday, June 21st, 2024. Hope everybody had a fantastic week. And before we get started, I just want to apologize in advance if you hear some background noise. I have an air conditioner running. I know it's not very professional, but it's pretty close to me here, and it's a little warm in my room here, so I just have it running. It's on standby now, so a little quieter. But anyways, before we get started, make sure you smash that like button, hit the subscribe button if you just find the channel for the first time. And as always, leave comments or questions down below. But yeah, just make sure you smash that like button now or on your way out. All right, so quick video today, guys. We're just going to talk briefly about time frame trading. And so let's just jump into it. So as you know, I've been trading a lot on the very short time frames, on the 5 minutes. I've gone back and forth from 4 hour and 1 hour to all the way down to the 5 minute. But the last little bit of time here, I've decided to basically kind of split the difference a little bit. And for, and again, this is if you're day trading. To maybe swing trading, because this time frame could be both, depending on how often you get setups and how fast the market moves. So I'm talking about the 10-minute time frame. Now you could use 15 minutes if you want to, but I like the 10-minute. And if you're using anything other than MetaTrader 4. You have a 10-minute time frame. If you're using MT5 or any other newer platform, certainly you'll have those in between time frames. But if you're only using MT4, for whatever reason you don't like the 10-minute, you can use the 15 too. But I wouldn't go any higher than that for what I'm going to talk about. Okay, and basically the reason why is just because, especially for the way I trade and the way what I use here, and again, I'm not to rehash, but I'm using the Heikin-Ashi Smooth set to a period of 3 and linear weighted. That's what this is on the screen. So they're essentially Heikin-Ashi candles, but they're in the form of a 3-period linear weighted moving average. So which smooths it out just a little bit more than if you're using straight Heikin-Ashi candles. And again, like I said in the last video, if you applied Heikin-Ashi candles to this chart, they would look almost identical to what you're seeing here, but the Heikin-Ashi Smooth does just that. It smooths it out a little bit more because you're basically turning them into a moving average, which is what I like. And so from a standpoint of just analysis, if you start on a 10-minute chart, again, it's very easy just to kind of see, kind of what's going on here, and kind of having a good read on what price is doing. So the market, unfortunately, is going to go through periods of consolidation like this. And this can be tough to trade when you're trading trends. Although, technically, there is a trade right here to this high. There is another trade here to this high. And there's a trade here up to this high. But this essentially is all sideways price action. And so using the 10-minute chart, as opposed to looking at that same area on the 5-hour chart, where you might get pulled into many different areas along the way here where there's really no trade. 10-minute chart will smooth that out a little bit, and you can look for nice flat bottom Heikin-Ashi candles where you can try to get in, and you can just see how smooth this looks. Now we had this big drop. This is gold. We had this really big drop today. You can see we were pushing up. Price came up here. Then there was news this morning. There was what was it? I think it was PPI or a producer price index, or I forget what it was. There was some economic news this morning which caused this to drop. It was positive news, so that usually equates to kind of negative news for gold, depending on how the market reads it. So we were making these higher highs, and then we came up here just before the news, and this is where the news came out, right at 8:30, right here. Price pushed up. We had all these wicks where it was kind of running out of steam, comes back to this recent high, okay, and then boom, the price fell down. And you can just see how nice and smooth this is. If you had jumped in here on this 10-minute chart, you could have played it all the way down. And but I want to bring your attention, so once you see something like this, we have this swing low right here that price breached. Okay, so what I would do is, once I see this swing breach, I would then go to my 5-minute chart. And you can see what's, again, very nice about this Heikin-Ashi smooth is this right here. Okay, we had price break through here and then come back, retest it, throw these two indecision candles, all right? They're blue candles, bullish candles, but wicks on both sides. Just indicating there's no momentum. This is just basically, a piddly attempt to bounce off this low and go higher, and then the bottom just falls out. So this is what I really like about the Heikin-Ashi candles too. They make these levels really clear, and so this was the last swing low before this high was put in. And so, you draw these horizontal lines and you just watch these areas. When price comes back to it, you can either look to, if there's a nice strong bullish move off of here on the 10-minute chart, and then you can confirm it on the 5-minute chart, then price is going higher again. But you can see we broke through here. We never got a bullish candle. We had all bearish candles on this 10-minute chart. And even on the 5-minute chart, the two small bull candles we had were very much indecision candles and were very weak. So if you didn't get in over here, which you probably wouldn't have, this was the ideal place to get into this trade. And you could have held it all the way down. And you can see again, even on the 5-minute chart here, we had these two indecision candles here for this continuation. We had indecision candle here for this continuation, and then of course the market just petered out for the day since it is Friday. Okay, and then if you look on, so this is treasury notes, and you can see we're making higher highs here. We had this big run up yesterday, and then we just kind of started moving sideways, and then we made a couple of feeble attempts, did make new highs, and again then we had. Now this one's a little tougher to see on the 10-minute chart because this was actually the swing low before this high was put in, which you can see it more on a 5-minute chart. But even if you wanted to be more conservative and say, okay, well, I'm just going to ignore this one and I want this one right here, and price comes down, breaks through this low, then this is your entry. Okay, and on the 5-minute chart, it would have been right here on the close of this candle, and price pulled back a little bit here and then it kept going. So again, it just kind of smooths out the price action, lets you see these levels very clearly that you can, mark up your charts before before things start for the day and just say, okay, where's my line in the sand, right? If we're in an uptrend, where was the last swing low, that we can mark off on, say, a 10-minute time frame? If we're in a downtrend, where is the last swing high? Okay, so if you look at, now obviously this has all happened, so let's just take all of this off the chart. I will leave this candle, this line up here, because this is basically, to me, is the change of trend line. If price came all the way back up here, broke this, kept going, that would be a change of trend. So I'm going to leave this one, but we're going to not really pay attention to it right now because it's a long way away. But looking into next week, we have this right here. Whoops, it's not the indicator I wanted. We have this right here, okay? So we have this swing. Now, I'm not saying that this uptrend is over because, again, we're just going into the end of the day on Friday, so this is a little profit taking, maybe closing positions. This could turn and go back up next week. But from where it is right now, okay, we don't really see a clear level here. So again, you could drop to the 5 and say, okay, this is kind of the last little consolidation before this high. You can see price is trying to break through there now, but again, this is, the market's closed now, so for the weekend. And so, but if this were, in the middle of the trading week, I'd be, considering this as kind of a breach of this zone. We had this downtrend, we had this correction up, okay, and now this is our swing high, okay, before we potentially move lower again. So if this follows through next week, then this would be a great shorting opportunity. Now this could just turn and keep going up. I don't know. Again, we're heading into the weekend, so you really have to ignore this last couple of hours of price action. You have to really just wait and see what happens next week. But again, you can see a clear break of structure from up here that ended this uptrend. You had plenty of opportunity to get into this if you were watching it, okay, and you could have rode this all the way down. And then you run into these indecision candles here. We have, you know, about an hour's worth of wicks on either side of these bear candles, which to me tells me that, hey, price momentum is slowing down on this downtrend, and we could at least have a correction. So, I mean, you could have held it in here thinking that maybe this was just going to roll over and keep going down. But what I probably would have done is, as soon as I had, you know, a strong bull candle, like right here, I would have just exited this trade. Or even on this, if you want to be really aggressive, as soon as you see one bullish candle, just exit. It's not a real strong candle because there's a wick on the bottom. But, you know, if you had held this from all the way down from up here, you don't want to give that money back. And when you see all these indecision candles, there's a big battle between sellers and buyers going on right here. And obviously the sellers ended up taking control for at least part of the afternoon here. But again, you can see the nice smooth price action, and starting on the 10-minute time frame. And then finally on gold, copper. Oh wait a minute, I think there was one other thing I wanted to show you on here. I don't know if it was this one. No, I don't think it was this. Maybe it was gold. One second, guys. There's something else. This is for those of you that maybe would like to, you know, trade the downtrend. I mean, you got something like this here, right, where we had this big strong move. So those of you that maybe wanted to play a little bit higher time frame, you could use the MACD maybe to help you time the re-entry on these shorts. Like right here, we had a crossover, okay, and you could have taken this short here on the higher time frame. But I'm only showing the MACD on this 1 hour time frame. It's not really anything I'm trading actively. So you know, but I did want to show you that. Okay, so let's now just wrap up here with copper. So this is copper, and you can see this has been in a very clear downtrend. Again, 10-minute time frame. Okay, originally we had this up move right here, okay, and then we had a failed high. So we had this move right here. If we go back in time a little bit, we had this swing low right here. Price went up, made a new high, came down, and then it tried to go up higher again. It failed, okay? And then it started moving sideways. So theoretically, if you wanted to be aggressive, you could have gone short right here. Because as soon as this lower high was put in, the market was failing right here. You could have gone short. Now, you would have been, you know, maybe in drawdown or sideways price action for several hours, but eventually it did break down, okay? Now, but if you didn't want to do that, the next best thing would have been said, okay, so we put this swing low in, price failed to make the high, but if you wanted to be a little bit more conservative, you know, you just extend this over, and when this level is broken, then you take your short. And if you look and you extend this line over, how perfect this worked out. It broke through the level, came back, retested it, which is very classic, right, and pushed back up, retested it from the bottom, right, broke through, came back, retested it. You know, so support turned into resistance, and then you can see it crashed, okay? And so you could have held this all the way down. There were other entries right here. Now, if, you know, maybe you got out right here, you took this downtrend, got out right here, okay? And then in which case, this would have become your swing high. Price did end up going down a little bit, retraced again, failed again to break through here. So if you had gotten out over here and you didn't get in back in again, this was another opportunity to go short right here, okay? When it failed to break through this high, clearly made a lower high, and then it broke again. As soon as you get a bearish candle, you don't even necessarily have to go to the 5-minute. As soon as you see, if you're watching this, as soon as you see a bear candle print, especially one without a wick on top, which is this one right here, that is your opportunity to go short. So again, you don't even necessarily have to go to the shorter time frame to see this, but there it is. And then, you know, price kind of petered out. You could have gotten back in right here. This one was a little choppy, but again, it's late in the day on Friday. It's hard to really predict these late moves, but we did get some consolidation in here, but eventually it did start moving lower again. Although this could have been a tricky area right here, because if you got in short right here, you may have gotten stopped out on this candle, but it would have been a small loss, you know, and if you had played the rest of this, then who cares? And if you had just held this and never got out, then you would have just worked your way right through this drawdown or this pullback right here, and you still would have closed the week, you know, with this trade still running in profit. So, all right. So I just wanted to show you guys, you know, again, the power of these Heikin-Ashi smooth indicator, you know, just in terms of quieting down some of the noise in the market in general. To use that kind of as your analysis time frame. And then if you want to fine tune an entry, if you really feel you need to, or the level isn't really clear on the 10-minute time frame, then you can maybe drop to your 5-minute and find that level. But remember, the shorter you keep going down on time frames, the more you're going to maybe see a level that's not really a level. It's a minor structure pullback on that short time frame, and it could fool you, you know, into thinking that that's actually the best entry when it's really not, when really that better entry is on the 10-minute time frame, or the 15 if you really want to use the 15. But remember, if you go to the 15, you're going to lose even more detail. The 10-minute I feel is like good in between, but again, 10, 12, 15-minute chart I think is perfectly fine. Just again, the higher you go, the more detail you're going to lose. Okay, it'll become smoother, you'll get less entries, maybe the entries are a little bit more solid, but you'll lose some of that detail analysis. So for those of you that are kind of day traders to you know, to maybe short-term swing traders, this is a perfect way to do it. Okay, this is not a scalping strategy. These, you know, you're looking to trade the volatility on the day, okay, and really just have a bias for what the market is doing on that day. Not necessarily paying too much attention to the higher time frames, because you may not really be holding these for more than one session. So you really just want to kind of know what's going on, you know, what's the general feeling for that market that day, and what's price doing. And this is a great way to do that without kind of overanalyzing everything. And again, the Heikin-Ashi smooth is an absolutely perfect way to do that. And again, I have this set at a 3-period linear weighted moving average. And again, it's just a Heikin-Ashi candle overlaid on top of a moving average. So it just smooths it out, because again, like I said at the beginning, if you took this chart, this copper 10-minute chart, and put another copper 10-minute chart next to it and put regular Heikin-Ashi candles on it, you would find that they're very, very similar. Slight differences, a little bit more smoothing on the Heikin-Ashi smooth chart. And you could use a 3-period or a 5-period or maybe even a 7-period. And you'll see that you're going to have a little bit more smoothing than the regular Heikin-Ashi chart, but you're not going to lose much in terms of late entries or things like that. You know, if that you would maybe if you went too high. And using a linear weighted moving average will really give you the best focus on current price action. You know, probably even a little bit more so than an exponential would give you. So I recommend using the linear weighted setting, and keep the period very small. Nothing less than 3, but I'd say between 3 and 7. Experiment around, see what works for you, depending on what you trade. And you may have to adjust it as market conditions change. You may have to change that. So don't be so locked in on it. But that's a minor difference. Whether you have 3 periods or 7 periods, it's not going to look all that much different. Again, slight variations in detail you pick up or you lose, depending on how high or low you go. So, but anyways, guys, so it's a little change that I made. I may not get quite as many trades, and there may be days I don't get any trades, but I think for the most part, and because I'm only looking at really at 3 markets now, you know, basically, I think if you're playing the daily volatility, then more days than not, you should find something going on, at least one asset you trade. Now, if you're only trading one asset, which is perfectly fine, if you want to become an expert on just one, that's fine. Just understand that if you do that, you even on a 10-minute time frame, you could go quite a while without a trade. Meaning, when I say quite a while, I mean more than one session without a trade. And if you're okay with that, then fine, as long as you don't get FOMO or get so itchy that you have to be in a trade. And I know I can tell you my biggest thing, even after all these years, is that I still have to keep myself in check is over trading. Not so much FOMO, but over trading, and seeing things that maybe aren't really there. And some of that is driven by using too short of a time frame, which is why I made this change. So yeah, that's it, guys. I'm going to leave it there. Hope you enjoyed it. And again, any questions on this indicator? I know I've made several videos on this. I'm not going to rehash it. But if you have any questions, leave them in there. Again, smash the like button, subscribe to the channel. Questions or comments, leave them down below. Let me know what you're trading, if you use any of this, and again, what markets you trade. Like I said, I don't do Forex anymore. I only do futures. I'm glad I made the change, but you certainly could apply this to Forex too. Again, I just feel Forex, especially on real short time frames, it's just too choppy and volatile, and just too many false signals. And a lot of futures assets can be like that too. That's why I very carefully choose the ones that I trade that overall, not that they don't have choppy sideways consolidation times, but when they do trend, they have very nice levels and very plain and easy to see. You know, whether you're talking about like through here, yes, here's a choppy period here. We see very nice, easy to see choppy period here, and they're very nice, easy to pick out price action on the down move. Okay, so you got to get through those choppy periods. Maybe you will suffer a couple of small losses in there, but when you get that trending period back, you take full advantage of it. So, all right, guys, so that's it. Have a fantastic weekend, and we will talk to everybody soon.